Welcome back to the Wealth Juice podcast. As always, it's your boys Ryan and Corey here with another episode. Today we're going to go into a fun episode, a little bit different than our real estate episodes. We're going to talk about why we bought a Bitcoin. And I think a lot of people think Bitcoin's a scam, it's gambling, it's too complicated. So we wanted to break down an episode and kind of simplify it for the regular person, the average person, but then also just really not too technical on the back end, but just talking about why we added it to our portfolio. And I just want to be clear in the beginning of this episode, we are not trying to say this is real estate versus stocks versus Bitcoin versus crypto. We just want to simply put that, hey, we've added this to our portfolio. We believe it's a strong asymmetric upside if it works in the long term, which we believe it will. And talk about, people that are listening to the podcast. Most of you have real estate or aspiring to invest in real estate, but you invest in other things. Maybe that, like I said, maybe that is stock. Maybe that is some cryptocurrency. Maybe that is in some other businesses that you're buying. So we just wanted to talk about Bitcoin. We had a couple of gentlemen on the podcast previously. One gentleman, Stealthy Rich, you probably heard that episode. If not, that's one to bookmark after this. There's a couple people we follow on Instagram as well that are like big into this, and they're what we call Bitcoin maxis, where they are like selling every asset they own to buy Bitcoin because they believe in the asymmetric upside. We're not those Bitcoin maxis. They call it being orange pilled, right? But and once you kind of dive into this rabbit hole, I think we have been orange pilled. Yeah, I feel like the heavy amount of podcasts we listened to in the last year were all about Bitcoin, and we didn't want to miss the wagon. I've been in Bitcoin for a long time, actually, but I've been slowly dollar cost averaging. There have been times where I've turned off the spigot, turned it back on. I eventually once liquidated everything that I had when it was at like $17,000 for a coin. Dummy for me. But
I have a worse story than that. I think I've told it before. I went 2018. I got into it, and don't quote me. It could be 2017, 2018. I think it was 2018, but I bought in. I only put like $3,000 or $4,000 in, but I bought in at like 12 or 13,000, and I sold it all at like 6 because I didn't understand it. And I've said this before. Probably if you've been around for a while, you might have heard it on way past episodes and saying like, I'm not getting into any of this. But I've learned that you don't invest in things you don't understand. So like you and I did hours of research and hours of conversations with people that we really trust. And that was part of this. So like, why did each one of us want to get to one? That was our goal, to get to one. Again, not a pivot from our real estate at all, but it's like a portfolio reallocation. But my first experience with it was bad. I didn't know anything. And I was like, oh, I'm going to money go up this thing. Like, it's just like, oh, like not understanding something. It's just such a lesson for people. Like if you don't understand something, don't invest in it. And that's probably part of the reason why we wanted to have this episode of explain the why behind why we're doing it. So we both got to one, but I sold at a loss years ago, and I was like, oh, I'll never get into this. And then the world changes and things happen, and you relearn, and then you start to understand money from a different standpoint, and that's kind of what we'll talk about. But that's why I didn't really start buying until July.
At the peak.
I bought a lot at the peak, and then I've been buying consistently. Now, I think at the time of recording this, we're around $68,000. But I've learned so much from some people, like not personally, like Michael Saylor. It's like the volatility is a feature, not a bug, and that's the things that I've been learning about it. It's like the price almost doesn't matter right now if you think about the fundamentals. And we're not experts. You'll probably, if you are an expert listening, you'll probably hear that we're not experts, but we do know enough to talk about the reasons why we started to do it.
I think it's interesting. For me, my personal view is there's a bunch of different buckets, right? But we have our real estate investing as one bucket. Then we have our stocks and securities in another bucket. And then in the third bucket is like cryptocurrency. That's how I view it. And then within that cryptocurrency, there's Bitcoin, there's Ethereum, there's Solana, I'm just naming a few, XRP. And some people are like, hey, I don't have any of those. I'm solely straight up in Bitcoin. But for me personally, and
that's me, by the way.
That's you.
I don't have anything else except Bitcoin. Yeah.
And so I just believe in the future age of technology. And I feel like the way the world is coming, along with AI, it's like everything's becoming tokenized, everything's becoming virtual. And for me, it's just some other way to make sure I have some eggs in each basket. I follow a gentleman, we've actually had him on the show, Robert Croak. His podcast is the Rich Habits podcast. Great podcast if you guys are into investing too. Huge resource, but he's become kind of a mentor to us. And, I actually sat down and met with him, and we kind of talked about all of these little buckets that we're in, and kind of just, he didn't completely shift my portfolio, but we talked about some of the heavy hitters, and there's like, the market cap for some of these coins, like I really just picked some of the top 10 coins that I believe in the background and the founders. But Bitcoin is different than all the other coins. I just want to say that, like, that's like the granddaddy of all cryptocurrency. Like, if Bitcoin fails, all the rest of them, in my opinion, are going to fail, because you watch the market swings up and down, up and down. If Bitcoin proves that it's not worthy and it's not going to be a thing for the future, everything else is just going to go away. Cryptocurrency is going to go away, in my opinion. So I think the point is, like, that's why Corey and I picked that. That's like, we view it as gold, right? Like, it's liquid. I don't want to call it liquid gold. It's virtual gold, digital gold, right? And then for me, in my opinion, I look at Ethereum as the silver, right? Those are the two that have kind of gone up and down over the last, I don't know, since 2013 at its inception, something like that. So my point here is, this episode will be mostly about Bitcoin, but we do have allocations, or I personally have allocations in other cryptocurrencies. But we want to talk about Bitcoin as a whole. And it's not a stock, it's not a company, it's not owned by anyone. It's a decentralized digital monetary network, and it's a software. So I think for Bitcoin to really work, it has to become almost a currency in the future. And I think there's a couple of different acts that Trump and kind of like the global monetary system and what they're trying to do is change the way that things are regulated. And like, because it's a decentralized asset, it's kind of like the wild, wild west out there, right? So that's a good thing and a bad thing. Like, people will argue, like, if it becomes centralized, that Bitcoin's not what it was aimed and created to be, right? And so if it's that, then people are going to get out, and it's just, the government's going to manipulate it, and then it'll be a slow rise over time, like the stock market. Whereas it's supposed to be, it's decentralized, where you basically have the freedoms to do what you please with your money, and there's no like regulations over top. So there's the Clarity Act that is like up in arms here, and not up in arms, but it hasn't been finalized yet. But that's supposed to bring clarity to regulators, so that way, I think once this is actually finally passed, people will come in from not only from the banks, but from institutions, and they'll have more clarity on what Bitcoin actually is. Is it a security? Is it a commodity? And I think what they're trying to do with Clarity is to sign into that it's not a security, that it's a commodity, and it's just totally different regulations with that.
Yeah, that's a great point. I think people should look at it. It's like peer-to-peer, permissionless ownership of this. So, for example, this is why I really resonated with it. And I'm not going to say, like, sit here and be like I'm anti-government, but part of me has that in me, where I'm like trying to be like this, a little bit like not ungovernable, but more so like, hey, like, I don't want the banks to have final say and control over sovereignty, right? And that's part of why Bitcoin is, like, they call it the freedom money if you start to get really into it. But the permissionless ownership type thing is like, think about it like this. If you send a wire at 5:30 on a Friday, that wire goes to the bank, and then goes through the banking system, and the person doesn't receive it until Monday at whatever time, 12 noon. What's the reason why? Well, let's break this down. Over the weekend, the bank can hold on to the wire and make interest on that money for the 48, 72 hours that they hold on to it, and then that person doesn't receive it. So it's a holding period. I'm not saying it's fraud. I'm just saying it's interesting to be like, well, why can't things be done faster and quicker, and why can't you send something peer-to-peer without a bank being an intermediary? And that's why I really like Bitcoin, because it's pretty instantaneous. It might not be instantaneous from you to get it from the network to your bank account, but you can send it to someone pretty instantaneously. It takes minutes. And there's not somebody that you have to go to and be like, well, can I do this? Like, can I wire this? Here are the instructions. And then it takes a period of time. And, think about how big the banks are. If you send, how many wires are being sent on Friday afternoon that don't make it till Monday, and the amount of interest that they're collecting on that. When you put your money in a bank, it's just for them to lend out at a higher interest rate. So the bank's arbitraging your money. So that's why that's the functionality of Bitcoin until it becomes like an actual potential currency. And that might be years down the line, but the reason why it's going to continue to go up in value, in my opinion, is because of the scarcity of the asset. It's not just that. If you compare it to the dollar, let's just talk about the dollar real quick. Since 2000, $100 in 2000, you would have to have $188 today to have that equivalent. So that's like an 88 or 80-ish% increase in inflation over that time period, because dollars are not scarce, because they can get printed at any time. the government decides that we need more influx of liquidity into our system, so they print money, which devalues the existing currency. We've talked about this. Bitcoin has a capped 21 million number of coins, and they're mined, and each year they're mined at a slower pace, or it takes longer to mine an actual Bitcoin. So that's why long term, they're going to run out. And you're not going to be able to get in. Similar in a sense to real estate, where it's like you can build more, but the pace of which real estate is being built is slower than the demand for it. So that is like why I compare it a little bit to real estate. I actually think it's potentially more scarce than real estate, but it doesn't mean it's a better asset. It's just, in my opinion, I have kind of gone, quote unquote, all in for a period of time on it to get to a certain amount. And then I'm like, I'm not going to put every single dollar I have into it, but I personally like it more than the stock market. That's just me personally. It's because the thing about real estate, if there's one thing about real estate, is it's not liquid. Now you can pull lines of credit on it, and I think it's the best asset in terms of tangibility and manipulation of not manipulation, but what you can do with it. But it's not liquid. You can't just like sell something. If you decide to sell something, you have to go through the process of selling it, and you still have to take time, even if it's 2 to 3 weeks, to get your money out. Bitcoin is probably the most liquid you could potentially be, because in an instant you could sell. So if you've ever tried getting a mortgage, which I'm sure many of you have, you know how daunting and discouraging it can be of a process. The slow process, paperwork, being told no without any real explanation. One time we were even told that taking out a home equity line of credit on an investment property wasn't even possible. So that all changed when we were introduced to Neo Home Loans. What makes Neo different is literally how they approach lending. They're not just checking the boxes. They're legit problem solvers. They look at your entire financial picture and explore multiple angles, literally until they find a strategy that works. They helped us reposition our portfolio, pull out lines of credits to scale, and structure everything for long-term growth. And on top of that, their rates were some of the most competitive that we've seen. They just literally did whatever it takes to find a solution. For us, Neo has become our liability advisor, the same way you have a financial advisor on the asset side for the liabilities. If you're serious about building wealth through real estate, it's worth sitting down with them and getting your lending strategy dialed in. If you want to book a call with them, click the link in our show notes. Their team is unreal, but don't just take it from us. Find out for yourself.
Yeah, there's two things I want to touch on there. You mentioned the banks holding your money, and I just want to make it clear, it's very different from, the stock market, in the sense that, like, this is something that people around the world, it's global, that it impacts people. There's a lot of countries where people can't go get a bank account, and they have no way to send money to families who have left the country to another country, or just to their friends and family. Like, there's people that are unbankable, right? So this is a way to be able to have money in circulation and be able to send this peer to peer. And I think for some of the countries out there, this is one of the most life-changing things for someone, where they can't go open a bank account, but they're making money over time. Like, what do you do with it? Like, they're sitting on cash. And so for this, they can open a Bitcoin account essentially and exchange this from, say they live in, I don't know, Venezuela or something, and they move to the United States, or they move somewhere else, right? To be able to send that money with no bank account, how do you do it? If you each have a Bitcoin account, you can exchange that and send it to that other person's wallet. So my point here is, there's a lot of global impacts here, versus then it's just an asset that you put money into and it goes up over time. Corey mentioned the scarcity of it too. He also mentioned that you'll never get in. You potentially never get in when it's at the fixed supply of the 21 million. You can get in, but the price is going to be so much higher. Like, what is someone going to be willing to give up in order to give you the Bitcoin, right? So for us, I mean, I do believe in the next 10, 15 years that they could go up to $1 million per coin. Now, in between that time, there's going to be 50, 80% drawdowns. That's just happened over time.
We're in the middle of a 50+%.
And it's crazy because, you don't think this within the stock market. Like, you rarely see the stock market go down 20%. If that happens, people are like really shaky. Like, what's happening to the world? It's Armageddon. Everything's going down. But for Bitcoin, it's been less than 6 months. And actually since October, it went down. It went down a lot in October from July. And then
we're like 4 months off the all-time high.
Yes.
Yeah.
which is insane. To go from 126,000, I think was the cap or the max, and now it dropped all the way down to 60 at one point. So my point is, it's not for the faint of heart, and I think the way to do this strategically, or what Corey and I have done, is like you dollar cost average, and like meaning you set up auto deposits into your account from your bank to Bitcoin, whether you want to open up on an exchange from there's Coinbase, there's Kraken, there's Strike. There is River. So there's a lot of different ones.
River.
Corey likes River. Yeah. I like Strike. I'm a big fan. I'm not going to bash him at all, but I'm a big fan of Jack Mallers. He's a young cat. He's the founder of Strike in 21. He's very like in your face bullish these days. He's kind of changed his tune from like a family show to like
I love
back against the wall, me against the world thing. He is so bullish on Bitcoin, and he does if nothing else, it will just be like, hey, take this episode from Corey and Ryan, go listen to an episode of Jack Mallers. It's the Jack Mallers Show. He will hook you in within 3 episodes. And then it's like learning the technical analysis of this too. I'm in another couple investing groups. One is called Real Vision with Raul Pal, I should say. And I just love the way he breaks down cryptocurrency and Bitcoin and all these things, and they go into charting, and it really like allows you to track things. There's another gentleman, Mark Moss, who I've been following recently too.
Try to get him on the podcast. I reached out to him.
Did you?
I didn't hear back yet, but I would love to have him on.
Well,
yeah.
I think we'll get him.
Yeah.
He's cool. We have a couple of mutual friends, but he's super intelligent on it too. Another Anthony Pompliano. Actually, my brother went to school with his younger brother, which is so interesting. But Pomp is a big guy too. There's a couple other gentlemen. Michael DiPiore, look that up on Twitter. So there's just some other guys that I want to point out to you that are good, solid listens and like educational platforms for you guys to kind of dive in and get into the vortex. There's another gentleman too that we follow on Instagram. Well, obviously there's 2 of them. When I say obviously, Stealthy Rich. So at Stealthy Rich is someone that you guys can follow. He owns.
We have a personal relationship with him. Like we text him all like.
Yeah, we're literally in a group chat about Bitcoin. Yeah. But I will say with Chris from Stealthy Rich, he had a real estate portfolio of 100 doors, and he's liquidating. I think it's like 90% of that portfolio, if not 100%, to go all into Bitcoin. And he is like down the rabbit hole in the vortex, and fully bought in, completely orange pilled. So you can follow his Instagram. He goes into a lot of the technical side of things. He's also big into MSTR, MicroStrategies, which is Michael Saylor's company, and just. It's so interesting, this side of the game. And some of you probably have Bitcoin in your portfolio. Some of you have been like teetering with like, hey, should I get this? This episode's really just to open the door, open the eyes to like say like, hey, this is something that we are adding to our portfolio, because I do think that this could potentially change the way that everything goes down in the next 10 to 15 years. And like I have this very like exponentialist mentality where like the evolution of the world, it seems like it's all going completely to tech, completely to AI. There's talks of eventually like people not having to work because of not only the autonomous robots, but the AI agents and all these things. And I think that's way down the line, but people are building on these blockchains, on these cryptocurrencies. And so it's just super interesting that I feel like we're early. I feel like we're like right where the inception of the internet was. And I don't want to miss the wave. And what I mean by that is like not going all in on this, right? Like people will. But for us, it's just a way to kind of restructure or reallocate some of our portfolio to allocate and earmark some dollars for an asymmetric upside with something that I think can go 10, 20, 30x, whatever, 100x, depending what it is, whether it's Bitcoin, whether it's some of the other cryptocurrencies within that. But I think the granddaddy, like the mothership, if you will, of cryptocurrency is Bitcoin. And if that fails, I don't see everything else working.
Yeah. And also, I feel like we should be clear about this. We are not saying to go buy this until you do your own like research, because if you don't have what we call diamond hands, and I've had to learn that the hard way, then you're going to be really pissed off when you see dips and swings and stuff. So I think that just take what we're saying and go do your own research. And some of the research can be listening to us, but I'm pretty bullish on this to the point where like I've taken part of my stock portfolio and sold at near all-time highs and moved it into Bitcoin, because I see how quickly things are happening, and I'm starting to understand the actual potential value in the currency. I've read something the other day that says we're in 1996 before the internet right now. Now, it doesn't feel like that because everything's happening so fast, but that's the exponentiality of how quickly this game can go. So 1996, it took until 2007 or 8 until you're like full-fledged. I could be making that up, but like it took 10 years until you're full-fledged internet, like ready to go. But this could take 3. And I just think that if you understand the fundamentals of it, that is what changed the frame for me. And it took conversations with people who went all in, like Chris from the Salty Rich. And, when you watch somebody that works so hard to build a 100-unit rental portfolio, and he has gone so all in that he's liquidating not all of it, I think, like you said, like 90% of his portfolio, you just think, okay, Chris, why are you doing this? And talk to me about how you see this changing. And another like symptom that you're seeing here is like gold and silver have been on a tear. Now they've since come down. You've never, ever, ever seen gold have the volatility that it has right now. For years, it was like the safe bet. So why is that happening? And that, to me, is an indicator of something going on in the market. It's an indicator of people catching on to the debasement of the dollar. And if hard assets that you can't even really take places, like it's so hard to transport gold. If that, which to me is an inferior asset to Bitcoin, if that has been skyrocketing, there's a symptom in the market that's telling you, well, something is going on with the dollar, and it's constantly losing value, so people are putting their money in what they deem to be safe. Now, I think this is a lot of people that have the money, that are older, that are in their 50s and 60s and 70s, that maybe have not dove into Bitcoin or crypto in a serious way. And I think that money is going to shift to our generation, but I think that could take 10 plus years. So again, I that's why people call it virtual gold, but there's different characteristics and different properties. I don't like gold. I don't think that's something that I'm going to buy, but this is part of the reasons why I moved from the stock, because you're comparing stocks to dollars, or you compare Bitcoin to Bitcoin previously. And if you zoom out on Bitcoin, we call it a CAGR, which I'd have to look that up, CAGR. I don't know the exact term, but it's basically like the
cumulative annual growth rate.
Annual growth rate, yeah, exactly. So it's like 60% if you really zoom all the way out from the beginning. So now this year, actually, 2025, if 2026 is a negative year, it'll be the first time that it's been 2 negative years in a row. And like, I don't know if it's been forever, but a long time. And Bitcoin's been around since 2008 for anybody that's, wondering. But if you zoom all the way out, you can't compare it in a 3-month, 4-month, 6-month, or even year time frame. But if you zoom out, it's crushed the stock market. Now, can you handle that volatility as an investor? That's the question. Or do you want the safe returns of the 10, 12x%? And I'm just betting, because of like my tolerance, that in 2035, this is going to be $2 million, $3 million a coin.
Just to make it clear here, like a stock is, you're purely just buying a sliver or a piece of a company, right? You're buying into, like, for example, if you buy Tesla, you're buying a share of Tesla. If you buy into Amazon, you buy into Google, you're buying a share of that company. You're not buying into a share of Bitcoin. Like the goal or the thought, the idea is that Bitcoin becomes the global currency, right? Right now it is the US dollar is the US currency, or excuse me, the global currency that everyone's backed on. It used to be gold, and that changed a long time ago, but you can see now money is outflowing out of the fiat currency, which is the US dollar, because it's gone down so much in value. We just keep driving the dollar down. And how do we do that? By printing more money. Back to what Corey's point, like if you think about during COVID, right? The market took a big dump in I think it was like April, right after the world shut down in February, and it kept going down, 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 down. Then the U.S. turned on the spigot. They're giving everybody these, what are they called? Stimulus checks, and they're pumping more money in to keep everything afloat, right? The national debt that the United States have, I promise you, we are never getting out of that. That is,
38
we
trillion.
are a debt-based system. Like, you're never getting out of that, and I don't think there's any intention to. But my personal take is they're just continually driving down the dollar to eventually potentially shift into something like Bitcoin, where they can offset. I think there's like some strategy here, but for the U.S. to also get in and build up their Bitcoin reserves, we don't know any of this to be completely true, meaning like the strategy, but it just seems like the puppeteers and the global powers of the world are strategically buying into Bitcoin. You see like BlackRock and these big companies, Goldman Sachs, they are heavily buying. You can track this stuff online too. They're heavily buying into the dip right now with Bitcoin down to 68. They're getting it half off, and they know that. And what they're doing is they're pumping fear into the market, saying, oh, everything's falling. Bitcoin is the least viable asset, right? Like, what goes down first? Stocks go down first, then it goes down to Bitcoin, and the most volatile assets go down first. So it's immediately Bitcoin. They talk trash on that. But if anything happens to their precious stock market, which is like basically like the savings plan of the United States, like they always save the stock market. Think about it. It's never gone down worse than 20%. If it does, the whole world goes up in Armageddon. They're like, oh, the world is ending. It's crashing. So my personal take is that now that everything is up in arms with it's almost like, it feels like World War III is like just like right around the corner with all the different things going on. It started back. I didn't start back, but if you looked at the war in Ukraine, like unshakable right there, the world's going up down. All these tariff things that are happening. It's even happened back. I think it was when. I think it might have been even Obama was in office, or maybe it was right when Biden got in after that. But it was things that were going on with South Korea. And so there's just so many things that are going on.
South or North?
North Korea. Sorry. Is that King? I don't want to.
Yeah, King Jong.
I don't know how to say his name.
Sorry, folks.
But, it's North Korea. So, but what I'm saying is like, there's so many things that are making the world shaky in the last like 10 years. And the first thing to go down and shoot to the bottom is Bitcoin, right? But it's so interesting. As soon as money starts circulating and getting pumped back into the economy, this thing rips. It absolutely skyrockets. And so I think it's just something to be aware of. Like now, I'm just talking about this now because I was talking about the U.S. like building up its reserves. We're still waiting on the Clarity Act. We're still waiting on a bunch of other things to happen to make this become a thing. I think as soon as these things start to happen and we start pumping more dollars into the United States again, this thing is going to absolutely moon. I don't know that it stays there that way forever. And I think that when you get to the top, right, take this is just kind of my thoughts on this, is like, take some of your profit, like take 20% off that and put that into something that's a little bit more stable, meaning like you can dump that into your stock portfolio. You can go buy another rental property. This is just, we're building for this asymmetric upside. I can't tell you the amount of times in the last like 3 to 4 years, I'm just buying and holding for the long term. My portfolio had gone up so much. And then I was like, oh, it's going to keep going. And I didn't take any profit. And then it goes back down to like halfway through what I had. I'm like, okay. That was a loss for me. So it's not only building up your asset allocation and accumulating these assets, it's also having an exit strategy. Because if for whatever reason this doesn't work, you don't want to be left holding the bag. I think there's a lot of traders involved now too, and especially with all the ETFs inflowing, there's just different layers of Bitcoin and ways you can manipulate it now versus previous to all the institutions coming in last July. And that's why I think it drove up it drove up the market cap, so it drove up the price, right? So if you think, I don't know the gold's complete market cap, but I know that Bitcoin, and
it's like it's like 30 trillion.
30 trillion.
We can look that up.
Maybe we can pull it up on the screen there. But I will say Bitcoin's
Terry,
at
if you could look up gold's market cap, that would be really helpful. I think it's like 30x Bitcoin, and Bitcoin's like
1.7.
Yeah, 30 to 35 trillion. Bitcoin's, I don't think it's at 1.7 anymore. I think it's like 1.3. Yeah, so yeah, it's like 30x.
Hey, let me pause the episode real quick. Let me know if this sounds like you. You're making 6 figures, you're climbing the corporate ladder, investing in your 401k and your Roth IRA, and maybe even a brokerage account. But deep down, you're asking yourself, is this really it? Like, am I just going to do this thing for the next 30 years and hope to retire in my 60s? That was exactly us just a few years back. We were curious and excited about real estate, but overwhelmed and without a roadmap. If you fast forward to today, we've built a portfolio of over 80 cash flowing units and grown our net worth to over $2 million. We made it our mission to help busy professionals like you take that same leap and start building generational wealth for yourself and your family. That's exactly why we created the Wealth Juice Inner Circle, a private real estate investing community designed to help you get your first rental property under your belt in as little as 90 days. Inside, you'll get direct access to us, our full investing network, private off-market deals, and our exact playbook, and a community of investors who are closing deals every single week. That first property changed everything for us. We always talk about it. It was the true foundation for building generational wealth. And honestly, if we had access to something like this when we first started, we'd be 10 times further along by now. So if this sounds just like you, click the link in our show notes and schedule a call with me. Yes, me. I'll be taking the calls. We'll go over your goals, map out a plan, and get you ready to close your first deal. Let's get it.
So my point there is like, if money can flow not only from gold, but from other things into Bitcoin and drive up that market capitalization, also baking in the fact that there's only going to be 20 million of these things, that they are going to skyrocket in value. And now some people are banking on this to be their complete future. Like if you look at all the crypto junkies and stuff, like they are all in and specifically on this. But I think as a strategic investor, you can have a small sliver of your portfolio into this in the event that it does go up all the way to what we think it could potentially be. And then when it reaches its peak, you can either liquidate it or just let it keep going up, or just move some of this cash into more stable assets. Maybe you pull some cash, just leave it in the bank. Maybe you pull some cash, you you increase your rental portfolio. Maybe with some cash, you add it into the stock market. So I think there's just strategic ways to do it where a lot of people will pump and say this and like, all in on Bitcoin, go just like fully go all the way in. But if it doesn't work, I just want to say like, then you're left holding the bag and then you're in financial ruin, right? Where if you can have it diversified across a couple different asset classes, I think it'd be in a really good spot. And you just see these things continually go up and down. Gold and silver are ripping right now. Then they went down a little bit, but like the last 10 years, the gold and silver holders, they were like, well, I don't know what I'm doing, but I'm keep buying into this. And like, I believe in this. And now in 2026 or the end of 2025, they were at new all-time highs. They look like they had the best trade of all time. Where Bitcoin back in the summer, you looked like a hero in July. And we could say the same with the stock market. You know, after COVID, if you bought when it went all the way down and then it ripped all the way back to the top, people made a ton of money. And same with real estate. If you bought when rates went down to 3% and you were like, the world shut down and everybody's like, oh, I'm against this, the real estate's crumbling. You know who the winners were? The ones that bought at the bottom of the barrel and it went all the way back up. As long as they continue printing money and saving the world, if you will, with this money, like there's no way to get out of this debt is my point. And they're just going to continue to print. I don't know what it looks like when that crumbles, right? Or that transition to potentially Bitcoin or potentially to something else.
Some currency has to rise from it though. That's
something I know it does. And so we're betting that there's a higher chance of Bitcoin to be that than anything else.
Yeah. And keep in mind, we are not traders. Like, I just want to say that and I think if you listen to like someone like Jack Mallers, he's saying like right now, Bitcoin's trading like a tech stock. And that's because people are trading against the short-term gains of it. I would not recommend buying this asset unless you are literally like, I'm not selling, or not necessarily not selling, but not exiting until 2030. Like, don't even think about moving your money. So we're not traders, we're long-term holders. And I think that is so important because what will happen inevitably is that people will get into this and then in 2 weeks it'll be at 52 and then people will be pissed. And it's like, that's not what we're saying. We're not saying that you should trade Bitcoin. I think that's negative. One of the biggest indicators that I've been looking at is like, look at someone like Grant Cardone. Have you been hearing what Grant Cardone has been saying recently? Grant Cardone's like the real estate guy of all real estate guys, right? And keep in mind, so are we. Not at Grant Cardone's level, but we're real estate guys. But listen to what he's saying. He's buying Bitcoin with the profits of his real estate company, and he's all in on it. And you should look and see how much he's bought. So I'm saying there's a shift. If you understand trends and you understand technology and you understand AI, the AI and Bitcoin equivalent kind of sparks interest for me. It's like things are happening quickly, and ideas start as people shitting on them until they get legs. And that's why... You know, there's just people that have been in Bitcoin since 2011 and 12, and they've made a killing. Like, I know somebody that lives near my parents down the shore, and my parents have a decent house, but there's this house down the block. And my brother was doing some research on it. He's like, these guys got rich in crypto, or Bitcoin specifically. They bought in like 2010, and they bought a ton, and they have this like $5 million, $10 million mansion. So like people have been in this for a long game. And I think a lot of those, what has happened is a lot of those individuals have sold and exited because, you know, if you're an institution, you're looking to buy hundreds of millions of dollars worth. But if you're an individual, if your portfolio goes from, you know, if you have $100,000 in when Bitcoin's $500 and then it 100x's, it's like, how much more money do you need, right? So watch the trend of Bitcoin and how much individuals owned it. Like in the 90th percentile back in like 2008, 9, 10, 11, 12, and how much it shifted into institutions. So the institutions are late, but the institutions are smart money and they're big money. So I think now it's like still 50 to 60% individuals. And maybe Terry could look that up, but because I'm not like diehard quoting this right now, but what is happening, in my opinion, to this digital asset right now is that the institutions are looking to shake the individuals out of their dollars. So what does that mean? Well, when Bitcoin was at $124,000, everyone thought it was just going to moonshot forever, and that's never how Bitcoin works, obviously. I bought in at that time because I understood the fundamentals, and I was like, you know, it doesn't matter if I buy in at 120 or 75. Or candidly, I didn't think it was going to go into the 60s, but it doesn't matter because I'm in it for the long haul. But what I'm saying here is what has happened, and it has not typically happened in the past because institutions haven't been involved in Bitcoin, is that there is a little bit of like, you can call it price manipulation, because a lot of institutions, in my opinion, are trying to get in. The $100,000 number was when they're trying to like, oh, this is fair game. This is ball, like where we want to get into this. And so when the price gets to that, there's like this pressure, this downward pressure. And then individuals are like, I have already made a bunch of money, so I'm going to exit. And that was the sign for institutions to get in. So it's kept this price a little bit lower. But think about, if you're an institution, like, are you spending hundreds of millions of dollars on an asset that you don't have some foreshadowing of where it's going to go in the future? Like, there's so much data and research behind this. So you kind of have to trust the institutions in a way. And that's where I'm like, okay, all this sailor and all this big money is coming into this asset that was previously unknown. We're seeing a shift. It's like you either like learn it or ignore it, but choose wisely.
It's overcome so much in the last, 10, 15 years or, since 2008. And I think it's just so interesting to me where you've seen there's just a couple like big fallouts that have happened, but like the FTX was one of them where it's like a bigger Ponzi type scheme where like people were investing in that. And the founder was investing into other things like personal things. And it sucks because it scared a lot of people away, and then Bitcoin went down for a long period of time. And it's just funny. It's like the end of last year, like the Epstein files have come out, and there's something leaked in there in like the emails that Epstein was like funding part of the Bitcoin project, and there's speculation that people keep trying to call him Satoshi Nakamoto, that he was the founder of Bitcoin, to scare people away and say it's like it's like dirty money at this point, right? And so I just think there's things like this that have continually happened. You can look at the timeline. I don't have all these events in front of me, but over the last 10, 15 years that have happened, and you see the major dumps in. And then the smart buyers are saying, okay, that's an opportunity for me to dump in. When the whole world is talking crap on it, that's when you buy in. It's get greedy when people are fearful, and become fearful when people are greedy, right? Like in July, when people were getting greedy, when it was at the top of the market, that's when you should have taken a little bit of percentage out of it when it hits all-time highs, just to have a little bit of cash in your pocket, because at some point it's going to give. I don't think anyone thought it was going to go down 50% as quickly as it did. A lot of different things happened. But my point is, now that it's back down to like 68,000, I personally, we turn the DCAs on. Like, this is the time to keep buying and keep inching your way in my opinion, because if it goes back up to that 100,000, look at that. That's a $40,000 spread, or a $30,000 spread, depending on where you're looking at. But I do want to give a website for you guys to track, and this is cool. It just talks about or it tracks the bull market peak indicators, like, so you can sell at the top. It'll be very hard to ever sell at the complete top, but just so you can kind of ladder your way in and out. It's called coinglass.com/bull-market-peak-signals, and it's something I have set up my on my bookmarks. And we're in a 100% hold period right now. People are like, it's not the time to sell. When things are driving down, you're not selling. This is the time you're buying, right? Or you just hold what you have, hold your bags. Like, it makes no sense for it to be at 126, and then going down to 68. Why would you sell now? They're causing fear. They're causing panic. We're still waiting on the Clarity Act. So many institutions are still buying. It's just not the time. It makes no sense. And the fact that we're even still at the highest or the lowest fear and greed mark, right, at this point, and we're still at almost 70,000, it makes zero sense to sell, in my opinion. Now, could it go all the way down to 20, 30, whatever? Certainly, it totally could, but I think there's too many smart investors in here now that can continue to buy, especially even like, Sailor and MicroStrategy and Jack and all these guys. Like, there's people out there that are going to continue to buy at the lowest possible. And it's just, as long as the market cap keeps going up over time, I think this is going to be in a really good spot. So, we still have a ton of other talking points, but I really want to get across to people, like, they will make you feel stupid. They'll make you feel dumb. Like 90% of people, I feel like, are not in Bitcoin right now. And I think
More
that's
than that.
99 maybe. And I just think for smart investors that are listening to shows like this, or looking to grow your wealth, like, it's something to consider and to look into, because you could be looking back at this and be like, that was one of the best decisions I ever made for the strategic asymmetric upside to potentially, it's life-changing money. There's people that are in this purely for the volatility. And I will say, we were talking about the volatility, and like, some people can't stomach it, but that's what makes Bitcoin so beautiful. It's like, no stock is going to go up 100%, in 1 year. I mean, maybe like you maybe have a moonshot, but like the S&P, right, the basket of funds, typically goes up 6 to 12%. It was on like a 17 to 25% grind in the last couple of years, depending on the cycle. But my point is, this is something that you could potentially get into in crypto as a whole, where you're putting in $100, and that $100 can go way higher over time. So for us to make any like strategic moves, we're like, okay, I don't want to just have $100 in this. Like, I want to have a good chunk of my portfolio in this. So like, when we've reallocated or sold a property, like, some of the funds go into Bitcoin, some of it goes into crypto, some of it goes into stocks. Like, there's there's a way to reallocate your money so you're not into something all the way through. Now, there's a bunch of different schools of thought on that. Some people say, you're dumb, bro. I'm all in on real estate. Some people say I'm all in on stocks. Some people say I'm all in on Bitcoin. There's a gentleman, Chris Johnson, who we follow on social. He was he owns what does he run? The
He owns a watch company, but then he owns Wealth Squad.
Wealth Squad,
and
that's
then
what it
he also had like over 50 properties in Houston.
Yeah. So he's just been in the game for a long time. He's an ex-military guy. Has made a ton of his money through great follow. Ton of his money through trading, actually. And then he created like a private community and helped people essentially grow their money through trades and all these things, right? But he, a couple of years back, started doing the same thing as Chris from Stealthy Rich, and I started noticing this. He was selling off all of his assets to go into Bitcoin, and I've seen him like stroke, screenshots of this, so who knows exactly. But like most recently, at the end of last year, I think Bitcoin went down to like 80. I don't know what it was, maybe like
he bought at 88. He bought like 17. Something.
He put like $3 million into it.
Yeah.
I saw him. And for social, it was kind of interesting. It was like obviously compelling, but like he sold off his mansion, he sold off all of his cars, and he was just straight buying Bitcoin. He's got a massive allocation, right? Like 18, 20 Bitcoins. That's like next level. And I'm just saying, there's people out there that you can look at that are going all the way in on this thing, and there's people to study. Then there's other people that are just using it as like a little caveat to their portfolio, a little like central ground to say, hey, don't want to miss the wave if it does take off. So you have to figure out what your risk is and what you're good at. Like Corey and I, like real estate is our bread and butter. That's what we're really good at. And that's what we, how we grow our wealth and how we have and how we will continue to. But there's other things out there, and I almost didn't want to put it on an episode like this because I think people will feel like it's shiny object syndrome. We've done so much research on this that like we're bullish on it. We believe in it. And
it took us a while to like put it out too. Sorry to cut you off, but like we were like, I actually didn't want to put anything out about this until we got to one each, because that proves that like, okay, we're serious about this. And we're not just talking about it. Like we actually have gotten involved, and and so that's to your point. Like, this is not shiny object syndrome for us, in my opinion. It's like, if you want to learn how to buy real estate, like that's what we're doing consistently on an everyday basis. But I feel like the same token of why we started this podcast, sharing our story and telling everyone what we're doing, I feel like we'd be doing a disservice by not sharing that what we've not pivoted but added. So that's also part of the reason there.
So there's number of ways to get into Bitcoin, and if you've listened and you're like, okay, like I see the vision, I'm getting interested in this, like listen to a lot of other podcasts, do your research. There's actually a couple good books out there. One, start with like The Big Print. That's a really good book. Couple other ones too. I'll get the names for you, but
the Bitcoin Standard's really good, but it's also like a lot. You really gotta like, I was listening to it on an audiobook and I was like in over my head with the term, like how to frame my head around it, but that's also a good one.
Mm-hmm.
Yeah.
So overall, I just wanted to bring those up so you guys can start doing your research, but there's spot Bitcoin ETFs now that are bringing Wall Street into Bitcoin. We already kind of talked about like that, like with the creation of the inflows of ETFs, right? Like money from 401ks, from brokerage, all this, it's flowing in. IBIT is one of them, and that's probably like the biggest one right now. So you can buy there. I would also, like personally, from all the research we've done, Corey and I are just buying Bitcoin as like the traditional coin itself and like putting it into like a self-custody wallet. And I'll explain this. Like, so what I mentioned earlier in the episode, you have things like Coinbase, Kraken, River, Strike, and these are companies similar to like a Fidelity or a Vanguard, if you think about like for your stock company or stock portfolio. And when you buy Bitcoin on these exchanges, that like they control the exchange. And I'm going to say this, there was another exchange back in the day called Voyager, and they gave you like a benefit for leaving your coins on the exchange. It's called like staking, where you would get a percentage. Basically, it's almost just like for leaving your money in your bank account, like your high yield savings. You know how they give you a range between like 0% to 4%, whatever it is. Similar to that, right? Voyager, the company, went bankrupt, and there was something that like went down with the company, and I had all my coins and all my stuff on there, and lost it for a long period of time. And that because it was on their exchange. I didn't get all of it back. They give you a percentage of it back. I forget exactly what went down with Voyager, but that's my point when I was telling you earlier, like I had a good decent allocation of Bitcoin at 16,000. And that happened, and I got scared, right? Like I was like, "Oh, this is going to shit. Like I'm out." And so when I got the money back, it took a long period of time. That I was like, had to go through like due process with legal and all that for everyone that was within the company. I got a check back for like, I don't know, let's just call it. I had over 20 grand in there, and at the time I felt like that was a ton. And like I got back a check for like $5,000. So I made way less back, right? Because they gave it to the price of what Bitcoin was when it like was at like its lowest peak. So it was Bitcoin, it was Ethereum, and a couple other coins in there, right? So I got that back, immediately just put it into the stock market. I was like, okay, I'm out. I'm not doing crypto anymore. And then the next cycle comes, Bitcoin booms again. And I'm like, okay, I messed up big time. And I'm like, this wasn't the 130 mark, but it was like maybe at like 72,000. And I'm like, I'm not missing out again. I don't care. It's at the peak or whatever it's happening. I was so fixated. I did all the research on Bitcoin and I just got scared. So that I got back in, and things have been, in July they were great, not the best at this point. But overall, my point is I've continued to dollar cost average into my portfolio. I have a decent chunk in there. I love it. And it's fun for me, honestly. But I will say, me bringing this up is be careful of the exchanges that you put your money into as your dollar cost averaging into here. I think Coinbase at this point is probably one of the biggest ones that everyone's into. River's another one, Strike's another one. But what I do, and I think Corey does the same thing, is once you buy the Bitcoin on there, we immediately pull it off. Or once we get to a certain point, we pull it off and we put it into a cold storage wallet where it's like it's in our own protected side wallet, baked by a bunch of different, I forgot what they're called, but like super strategically like
it's like your keys.
Cryptography. I don't know how to explain your keys, but like I don't really know how to explain how it protects you versus the
yeah. You're pulling it off the exchange, and it's like you actually physically own it. It's almost like a hard drive. So it's like an external hard drive in a way. I mean that's like the dumb guy way to explain it.
It's protected
but
by like an algorithm. Is my point.
Yeah.
That is like so Corey and I, when we buy it on our platform of our choice, I'm on Strike, Corey's on River, so take your pick either way. And so honestly, I have some of it on Coinbase too, so I can't tell you like there's one better than another one, but we pull that off into what's called a cold wallet, and there's a bunch of different ones. Trezor is one that really popular, and that's something that we use. And so you pull it off from the exchange onto the cold wallet, which is essentially like, think of like your cold wallet as your home safe, and it's just like an exchange on the side, so that way you don't have your money, and if something happens to Coinbase, if something happens to Strike, something happens to River, something happened like Voyager where my money's stuck, no, I hold this in my own exchange, if you will, my own cold wallet, my own vault, away from everything. They say there's a phrase you'll hear in the crypto world is like, not your keys, not your coins. So take it from me, an example, I lost it all, somehow got some back, but now, so I've completely pulled it off the exchanges. And so there's the reason to keep some money on the exchanges is like, that's the trading platform. So for example, if Bitcoin ever starts trading all like going really, really low and you want to get back in, or really, really high and you want to sell some of your coins and make a little bit of profit, instead of having to trade it back from your cold wallet onto the exchanges, you can leave a certain supply of it onto the exchanges. So that way you can take advantage of the buy price. So overall, I would say, make sure you're protecting the asset. And that's like the scary part for some people. They're like, well, if it's not secure enough to be on the exchanges, then I'm out. Like, I'm not doing it. And I think we're at this point in time where we're still really early. And that's my point. Is like, I think all of this stuff will get adjusted, and it will, the security backed, the security of the asset and of the exchanges will only continue to get better. I mean, there's also talks of like quantum computing to be able to crack certain things. Though I do think that's like a concern for people, I truly feel like the way the world is shifting with this, and all the smart money's coming in with all these institutions, and like it's becoming a global currency in a way, or globally backed asset, that it's only going to be strengthened over time. And none of these big institutions are going to want to stamp their name onto something that has low security, that can be easily taken, all of these things, right? So just something to think about for where we're at currently in the timeline of cryptocurrency and Bitcoin. Get a cold wallet, and once it's on the exchanges, pull it off, protect it, have it in your own safe. It's protected by a 20-word phrase that you can only store in your brain, right? So the only way someone can actually take your money off of that cold storage wallet is if they know your specific passcode. So it's very well protected, is my point. It's not something that you're just going to put like a 3-digit code in and then someone can crack it, or they can do a face scan like your iPhone and break in and take your stuff. So do some research on cold wallets too. I'm not sure if I explained that so eloquently, but just something to just think, not your coins, or excuse me, not your keys, not your coins.
Yeah, also think about the exchanges this is how it was explained to me by Chris. The exchanges are the on and off ramp. And then, so like you're buying and selling to the exchanges, and then the cold storage is the holding. So that's how we do it. And I think that, overall, this asset to me is something that's growing. I really, really feel like we're in between the first and second inning. Like, I really think if you're talking about like comparing it to baseball, I really think we're still so early. And there's a ton of people that made a ton of money in that first inning. And we got in at the end of the first, That's really where I think this is, because things change so quickly. So, that is, take it for what it's worth for some guys that have been investing for 10 years and investing in real estate heavily for 7.
We've invested, I mean, dude, we've been investing for 20 years at this point, but into real estate, think about like when you started your stock portfolio, we've been investing for a long time.
Yeah, you're right.
So
I
we're
guess
getting
15 old. It would be, if I was 14 20 years ago. I mean, I guess I was doing it a little bit.
I would say when you're 18, I mean, 20.
Yeah.
I was definitely at my
15 years.
20. Yeah, it's a long time.
It is a long time. So, we still really think that this is early beginning stages, and I would feel like we weren't doing our service to the people that listen to our podcast if we didn't share about what we were doing. So if you want to have a conversation about this, I'm happy to chat. You can always reach out to us on Instagram at WealthJuiceOfficial. But this just was giving you kind of like a little bit of a portfolio update of what we've done in the last 6 to 12 months with the reasons why we are tapping into Bitcoin and how I'm very bullish on it, and I'm going to continue to buy.
Yeah, truly, like this, there's nothing to gain, nothing to lose. And for us sharing this, truly, like this is not like saying, hey, go buy Bitcoin. Hey, don't buy Bitcoin.
We don't make money if you buy Bitcoin.
Yeah, exactly. This is just what we're doing, truly. And I think at the beginning of the podcast or the inception was just like to showcase the journey. And it's interesting. It's something that we're excited about, to say the least. I think the world is shifting. We're in like one of the most interesting times to be born and to be living, and like the world is shifting, and this could be like a very big change. Like even if you think about even the inception or creation of AI while we are alive is insane. Like you can go in and like let your thoughts out into a ChatGPT, into a Claude, and like and they're spitting you back out. It's a supercomputer. We thought our phones were a supercomputer, right? Like, so technology is just ramping up, and I just feel like crypto is going to be here to stay for a long time. And the Mac Daddy is Bitcoin. I'd be shocked if anything happened, but I will say, like, people have made a lot of money in Bitcoin. People have lost a lot of money in Bitcoin. If you're going to get into this game, do not over leverage. This is not something where you're taking like a HELOC out in your house. This is not something where you're, going to take out a line of credit and invest in Bitcoin, because it could go down 50 to 80%. It's like slowly dollar cost averaging over time. And then when it takes a major dump, that's when, you have dry powder on the sideline, that's money that you've earned through other things, and you dump it in, right? I don't want people to get in over their heads on this and like, just be wary, but it's something that's super exciting. And I just think this episode really was just like, hey, we went down the rabbit hole. Like it's interesting. It's exciting. Feel free to take a gander down. There's already some of our good friends. We have our own little like side chat on Bitcoin. And it's, for us, we view it simply as we view real estate. It's a long-term play. All of these things, like, I feel like greatness can't be rushed. It's one of those things like you just, and that's kind of like, you learning a skill set over time, and we're just becoming better investors over time. And some things will work, some things will not work. Eventually I could see us buying businesses. Eventually I can see us buying, getting more into, how do I say this? Angel investing. So there's just a lot of different things out there where it gets exciting as you grow and more dollars come in and you become a better investor. You have more opportunities that come. I was, like I said, I was hesitant because I didn't want this episode to feel like a shiny object syndrome, to be like, hey guys, we've pivoted, we're all the way on Bitcoin. That's not the case. It's just adding a sliver to our portfolio. And it's exciting. So feel free to take advantage of some of those resources that we mentioned too. I think you guys will have fun along the way.
Love it.
Before we wrap this show up, I want to leave you with this. If you're listening to the show, chances are you're doing pretty well in your career. You're making maybe 6 figures. You're putting money into your retirement accounts, maybe stacking some cash in a brokerage account, but you're still waiting for that next level. And here's the truth. Waiting just costs you time. Every month you're on the sidelines is another month you could have had a property paying you and another step closer to financial freedom that you didn't take. Ryan and I know this because we stayed on the sidelines too long. We talk about this sometimes. We had the money, but not the guidance. And once we finally got our first property, everything shifted. It was the catalyst that built our entire portfolio and ultimately gave us freedom. And that's exactly why we built the Wealth Juice Inner Circle, to cut out wasted time, just give you the exact blueprint and surround you with a network of people who are closing deals every single week. So if you're tired of waiting and you're ready to finally get your first deal, click the link in the show notes and schedule a call with me. Let's map out your strategy and get you moving before another year slips by.